Hello, I'm Mitch Goldberg. Welcome to my live stream, Be the Boss of Your Money, where we talk about personal finance, investing tips, business strategy, and so many other things that fall under that umbrella. Couple things to talk about today. It's going to be a quick live stream today. Got a few things though up my sleeve for this week, and we are going to be getting into a lot of cool stuff this week. Some things that you want to know. But we're going to talk about the market today, what it means for you, and if you have something to worry about or not after today's little reversal. So we're talking about the Dow 30,000 hangover. I mean, it was just the other day, last week, that the Dow hit and it surpassed 30,000 for the first time. What an incredible milestone from 18,500 at the depth, the nadir of this bear market to all-time highs in the Dow. We've seen the NASDAQ and S&P 500 hit all-time highs. We didn't see the Dow hit it, though, because the Dow isn't really focused, isn't really concentrated in technology like the NASDAQ and the S&P 500. But certainly we've had a rotation, and the Dow has now become the king of the big indexes. But are we going through a hangover? Are we suffering through a severe correction? Are we going back down a lot? Right now, I don't think so. But let's get into it. We'll roll the intro, and we're going to talk about why this is the Janet Jackson market. Intriguing, right? Here we go. Hey, thank you so much for joining me. I'm Mitch Goldberg. You're watching my live stream, Be the Boss of Your Money. I'm here every Monday through Thursday at 4:30 p.m. Eastern Time. If you're watching this during the live stream, thank you for your time. I value that tremendously. If you have any questions, hit me up in the comments. If you're watching this in the live stream or if you're watching this on YouTube, in the replay, anywhere on social media, LinkedIn, Facebook, what have you, if you have a question, hit me up in the comments as if you're watching this in the live stream, and I will see those comments, and I look forward to that. To me, that is the actual best part of this whole thing. So, I see some comments already coming in. Keep them coming. I'll start to put them up on the screen, but I want to just get through a little bit of this and tell you why I think this is the Janet Jackson market. It means the market is asking you, what have you done for me lately? Right? What have you done for me lately? Okay, that was really bad. But I want to talk to you about that because the stock market, investors get spoiled very quickly. Everybody would have given anything to see the major averages and their stocks and their accounts recover from the depths of the bear market. And we've recovered, we've exceeded, things are good, can't complain, but we get spoiled, right? Aren't we spoiled? We had this is the fourth Monday in a row that we had a positive developments from COVID-19 vaccines. Today it's Moderna. I think they're submitting their NDA, their new drug application on an emergency basis now, pretty much today. 94% effective, very little side effects. People who were in the trial, unfortunately, did die from COVID. You just remember that when you take these vaccines, I don't mean to be lecturing. We all know that people suffered, died, lost loved ones to get to this point. I mean, it's just a lucky shot that people are able to get the vaccine before contracting COVID-19. But a number of people did pass away from COVID, but these people were in the placebo group. They didn't actually get the vaccine. The vaccine didn't show, didn't show any deaths. So it's a positive development for the world, for the health crisis we're going through, for the economy, for everything. And then we can get back to worrying about things like GDP, non-farm payrolls, corporate earnings, but all of those things are overshadowed, you know, by the macro events. You know, we've got the macro low interest rates pushing up the economy. A lot of things are improving from manufacturing. Services haven't been as bad as people thought. Certainly, the home building industry is off the charts, record highs. A lot of good things, but we're worried that the COVID cases drag everything down, and a number of um, shutdowns or social distance measures have been incorporated around the country. So is that going to squash the recovery, kill the market? And I've been saying here, I've been saying the whole time, I don't think the market takes a big hit, because why would you sell now if you're expecting vaccines and therapeutics coming out over the near term that will help with the healthcare crisis, and then we get through it? So that's the tug of war, right? So that's the macro stuff going on. So we've got vaccines, therapeutics versus the economy. That's the way it goes. But this is the Janet Jackson market. What have you done for me lately? Because we've been getting good news. There's really no reason for the market to go down today, except that the market went up a lot. It already went up a lot. And no matter what news we could have gotten today, in my opinion, no matter what news we would have gotten, would have helped stocks go up more. The market's tired. This is why I call it a hangover. The market's got to digest. When the market digests, that means the market goes down. Whenever you hear somebody, the talking head say, "Oh, we're digesting our gains," it's a euphemism for saying the market has to go down, consolidate the gains. It's another euphemism I guess. So that's what's happening right now. So we're bound to take a little profit. Don't get scared. It's profit taking is a normal thing. It was across the board. The Dow at one point had been down over 400 points today. We'll go through the major averages, but today wasn't exactly a horrible day. It was just barely a dent in the rally. So let's take a quick look at a couple of things. Let's take a look at the screens. We do our screen share every day, and I'm going to show you some charts and graphs and the whole stuff. Okay, so the Dow down 271, big deal. S&P off 16, Nasdaq barely off, 0.06%, down 7. The Russell 2000, that's the small cap index, that's been leading the way. So that was off just about 2% today, but that's up. I think it's up like 17% for the month, right? I want you to know November, this month that ends today. I'm making this video on November 30th, this live stream. This is the best individual single month since 1987. Do you remember where you were in 1987? I do. I was a sophomore in college when the crash of 87 happened. And believe me, back in college in Albany, we weren't really giving the stock market too much thought. There were more fun things to do than think about the stock market. And by the way, the stock market, okay, fun things. Did I open myself up to a whole thing here? The partying and stuff going on in college and the fun and the sports and the fraternity. Okay, stop it. So, the stock market wasn't quite the national pastime that it is today. I mean, that was before the internet. There was no internet. There were no 529 plans. The most you could put into an IRA was $2,000. There were no, as far as I can tell, there were no 401ks yet. In fact, when I entered the industry late 89, early 90, I had never even heard of a 401k plan. That's how new they were. Almost, no one had them except if you were like one of the biggest companies in the world. All right. So let's move on. The VIX. See that? I'm moving my cursor on that. The VIX. you would think the VIX would be up. You want the VIX if investors are worried, the VIX goes up. It's the fear gauge. Investors are not as worried. The VIX is very close to getting below that 20 number, that whole number, which I think could actually spark another leg up in the rally. But that just goes to show you that the fact that the VIX is down shows you that investors are looking today as just a normal consolidation, a mild give back. Could it grow to something like a 4 or 5% give back? Yeah, in a heartbeat. Still, I don't think any of us would have anything to complain about. Okay. If you take a look at this, this is a great chart on CNBC. I made something like this last week, but this is just so much nicer. But what led the market for the month. Okay. This is as of this past Friday, the November return. Boeing, wow, almost 50% return. Amex, Chevron, Honeywell, the laggards. The worst stock in the Dow was still up over 11%. The worst two stocks, IBM and Travelers, Caterpillar. The bottom stocks were still up. That just goes to show you how powerful this rally is. But here's a bit of the hangover effect, what I'm talking about. Okay, so the hangover effect is Zoom. So Zoom beat expectations for the third quarter. This is new news. This news just hit the screen like 1 minute before I hit the live button. Beats expectations for third quarter earnings and guidance for the quarter ahead. The company now sees 329% in revenue growth in the quarter ahead, representing a slight slowdown compared with previous quarters. So you know what that means? Zoom is getting hit in the aftermarket with over 300% gain in earnings. Why would Zoom be down? $21 a share. And if you look at the stock from where it was, let's take a look at the 52-week high on this. It's relevant. Just stick with me for 1 second. The 52-week high, let's get up here. All right, was over 500. Where are you? Okay, there it is. Did you see that? I messed up. Sorry. Okay, so you see that right there? 588 is the high. Stock is 478. That's one heck of a give back. And you might say, well, no one has anything to complain about because, the stock is up, so much for the year. But, so many people got so enthusiastic about stocks in the stock market in just the last 30 to 60 days. I call it the Johnny come lately crowd. Thank you, the Johnny come lately crowd, for taking us out of some positions so we can book some profits. Oh my God, I said I didn't mean to sound obnoxious, but that's the fact what happens. So Zoom taking a hit because it's not good enough. 328% year-over-year growth. It's just not good enough anymore. That's how spoiled investors have become, and that's how much these work-from-home, stay-at-home stocks have gone up. Let's take a look at the FANG M stocks. Facebook down, Apple up a touch, Amazon, Google, Microsoft, all down. Nothing crazy. They weren't down, out of the ordinary. Listen, Google was down, Alphabet down, 1.83%. But that stock was just like 1,400 pretty recently. So it's had a nice move up. Let's see how they're doing in the aftermarket. They're all up in the aftermarket. Look at that. Okay, we're 6 for 6 in the aftermarket. So that is pretty cool. Let's take a look at the reopening stocks. They were down across the board. You see American Airlines down 5%, but one of the biggest winners in November. I don't really look at American Airlines, Delta, United Airlines. I don't look at most airline stocks as investments personally. I just, this is my opinion. That's what we're here for. I look at those really as trading vehicles. You want stocks with high betas, meaning stocks that go up and down a lot on a day-to-day basis, a lot of volatility, because that's where you get that's what makes for good trades. Planet Fitness up a touch, but overall, Marriott down. By the way, Marriott was just like $85 a share 2 months ago. So these stocks are up a lot. Southwest Airlines is the only airline that I really consider an actual investable stock for an airline. And, that was just recently 37, 36. So it's 46. I'm just trying to put in perspective that Yeah, it was not a great day, but from where we've been in the last 60 to 90 days, this is pretty powerful stuff. The sectors, technology, work from home, stay at home stocks did the best. The laggards of the and healthcare, the laggards of the day were energy, financials, building materials, energy. These are the big ETFs that track the major sectors of the market. So just, economically sensitive stocks were a little weak today. I wouldn't call energy being down, XLE's energy down 5% and financials down over 2%. I wouldn't call that a little weak today, but given where they are, if you look at these lines of where they are compared to their highs, like industrials, XLI, you see my cursor there? It's almost at its year high. So it's okay. Nothing to get worked up about. Let's stop sharing the screen. We've got a couple people out there. Phil says, me too. What exactly was I saying before when you made the? I saw the comment come in at 4:33, so right after I went live. Oh, thank you very much, Phil, for watching. I don't remember exactly what I was saying at 4:33 p.m. today. Something about the Janet Jackson stock market consolidation. Thank you so much. James is out there. Hi, Mitch, joining 10 minutes in. What a month, eh? Hey, yes. Is that like an Australian thing? James is joining us from Melbourne, Australia. He is a financial advisor and a darn good one, and creates wonderful, amazing educational content that really has a way of, for me, for sure, for reaching me. And if you don't know James Wrigley, go follow him on LinkedIn. He's got great perspectives and a lot of smarts, and he's become a friend. Thank you, James. Andrew, yeah, you're partying. Yes. Well, listen, 1987, sophomore in college, the market's down. Who cares when you're in college? Right now, maybe they care because, that's stock market's a big focus. But in 87, the big focus was the movie Wall Street came out at that time. And when I was a sophomore in college, and that was a great movie, Charlie Sheen. And right around then, he also was in another movie called Platoon. Do you remember that movie? Platoon with Charlie Sheen, I think with William Dafoe, and was it Tom Berenger, right? So he had like two major hits come out at the same time, and that really propelled his career, like before the whole, drug and rehab thing. But I think he's doing a lot better. So we wish him well, Charlie Sheen. Okay. For you, Charlie. Yeah. So that was back in the day. All right. So that's really the big thing for today. Just a little bit of a give back. Could the give back grow into something more? Show me the big jump. Let's see if we have a major jump. Oh, Judy said, watching with you. I said, me too. Thank you. I see. Thank you. Thank you so much. Well, I see. I said, Judy's watching, and you said me too. And thank you. You're a good friend. Thank you. So, a little bit of a give back. COVID cases rise too much. Hospital systems become overwhelmed. That's what everybody's watching. And then we're watching the vaccines and how quickly. Listen, some of these vaccines, well, there's only really two. There's the one from Pfizer and the one from Moderna. But people could start getting injected, in like a week and a half, 2 weeks. It's really, really close. It's definitely a shot in the arm of. It's definitely a shot of confidence in the arm for investors, pun intended. And that's what's going on. That's the story of the day. I thank you for watching, and I will speak with you soon. I'll be back tomorrow.